Hey, what's going on, guys? Hope you all are doing well. Today is the 27th of April, 2022. I'm going to kick this live session off by doing a little bit of a giveaway. I said we were going to do one a couple weeks ago, but didn't have enough time to complete that. So if you guys joined in 2 weeks ago from our previous live session, this is for you. So this will be, I'm going to do two $50 giveaways here. So the first two people to answer this correctly will receive $50 from us. If you get it correct and you are the first two people, just please message us on Telegram at Ariel Fx Trading or on IG at Ariel__FX. It's a double underscore. So the question of the week, as I mentioned on the last live session, what is the one thing I look for when looking for a trend reversal? It's something that could potentially indicate a reversal. However, it is not necessary. It's not a necessary confluence for an entry. First two people to get that correct will receive $50. And then we will get started, crank this out. Nope, not liquidity, not pin bar. Keep going. It's one of the only indicators that I really use.
It's not the EMA either.
I mentioned it on the last live session. If you guys did not join in there, you probably don't know the answer.
Wouldn't that be a shame?
Repeat the question. So, what is one thing I look for when I am looking for a trend to reverse? It's an indicator that I use. Okay. Someone answered, yes, that is correct. Divergence. Volume divergence, that is correct.
All right.
Cool. So,
Everald,
yes, you and St. J, you are the two winners here. Please message us. Congratulations. Yes, it is volume divergence. Volume divergence is not necessary for an entry per my trading rules. However, it does have a big effect on potential reversal setups. If you have distributions or accumulations with volume divergence, it usually can potentially indicate a reversal formation. So, congrats to you guys. You are the two winners. Now, I will start off by talking about just one pair that I really am interested in trading today. And then we'll have Aiden go over a few pairs and go over a little teaching educational aspect to this live session that we will do. We'll have a theme of the week. This week's theme is time and price. As you guys should know from my Smart Money Concepts breakdown last week, we talked about time and price, and that's what we're going to be talking about today. So I'm going to share my screen, and we're going to go over.
Yeah, Everald. Yeah, IG at Ariel__FX. That's fine. Or on Telegram.
Good. Put a 1 in the chat if you can see this and hear me correctly. Just want to make sure everyone can see it. Okay. I'll just get started here. So, Eurocad. I'm going to do a little bit of a top down because that is the most important thing when analyzing a chart. It doesn't matter what strategy you use. In my opinion, top down is the most important to understand overall direction where we're looking to target. So I'll start with the daily time frame. This is really just meant for overall direction and where liquidity could be taken next. Obviously, we're in a major downtrend. We're bearish right now. If we scroll out all the way out, we can see and I've already marked this up with this yellow line here. We are looking to take this low. Okay, we're approaching this low. And what do we know that's below each low and each high? Liquidity, all right? So we oftentimes, if we are going to see some sort of reversal back to the upside, we would like to grab the liquidity, provide that liquidity. The banks and institutions will create liquidity for themselves before pushing their huge orders into the market to then reverse price. However, although I do like this low to be taken out, we do have more lows, intermediary lows here that will probably be swept along with an area of imbalance. So this is an imbalanced move, and we have our last institutionally sponsored volume to the downside, consolidation before the break. So I'm looking for 1.32 to be met. This is within this area of price. This is a psychological level for Eurocad. So I'm looking for price to continue all the way down into 1.32. But short term selling we will look to take out 1.35158. With that being said, now we know where we're looking to target. Now we can go down to the lower time frames and look for a potential setup if there is one. So 4-hour time frame, lower low, lower high, lower low is formed, lower high. Let's see where we came into that lower high. So we reacted from 1.37, about 1.3760. So you can see how we're coming into these levels basically to the T. That just shows that these institutions are reacting from these round figures. These are where these large orders are being placed, these round figure numbers. So if we scroll over to the left, we can see that where we created the lower low, okay? So the lower high was formed, the lower low was then formed. Lower high, look at this, liquidity, equal highs or ascending liquidity. We had this last buy to sell. So institutionally sponsored buying volume. And then an immediate reversal, a very strong reversal. Little to no wick whatsoever. That's what we like to see. We like to get in and then get out. We like to see those moves. That's just clear to us that the institutions are behind this move, that we're looking to take this short now, but we have to get out of our buying orders. Okay, so I'm going to do bar replay here. And I'm going to go and zoom in lower into this price. Okay, I'm going to go down to, I think it was the 5-minute time frame. Yep, 5 minute. So we have 1, 2, I wouldn't call that 3, 4 taps on this trend line here. So this area of resistance, retail trader resistance, is now violated with this move. Many people, retail traders trading the breakout, are now caught up in buys because they trade the breakout. Price moves back in the opposite direction, hits their stop loss. Now what they look for is the break and retest. So the break to the upside, a retest short. So this is the retest of the resistance. Now they look to buy it up here. Again, rolls back over. Retail is now stopped out. So now that we know that we have taken the retail trader stop losses and we have moved in the opposite direction, now we can come back up into this level, mitigate this price, mitigate this candle, and then continue in the overall direction. So it's exactly what we did. This is our last point of supply. This is the candle in which liquidity was swept. We have this 5-minute buy to sell candle, sweeping all of this liquidity, making that lower low. Okay, so let's exit out of here and let's see what we did. Well, that's exactly what we did. We came up into that level. I just extended the tan box all the way over. Pushed up, mitigated that level, and then we can just clearly see we absolutely just tanked from there. And we've been moving down ever since. But now let's just go deeper into this. Let's see where we could have caught a potential entry. I'm going to do bar replay again. And I'm going to go down to the 1-minute time frame. Now, what do we have? What did I just talk about with this question of the week? Volume divergence. We are distributing in price. We can see prices starting to slow down. Okay. We had our final strong sweep, liquidity run, very strong move, enticing buyers, pushing up into this area of price to mitigate those orders way over to the left, which I just talked about, and then moving away from it very nicely. We sprung, closed below the previous swing point. We are now bearish. Okay, we have intermediate swing point highs. Well, we had our last point of supply that was formed when we came up and mitigated, and then we fell. So we were looking to take price short from the imbalance fill, or really just anywhere within the supply level, which is exactly where we came into to the T. So if you had an entry somewhere right here with stops, yeah, I'll say right there, all the way back down. Just zoom out. 15-minute. And let's take this all the way down to where current price is. Knowing that higher time frame we're bearish, we can even be targeting our overall low at 1.32. But I'm just going to target, maybe an intermediate area of demand, like right in here, that's still a 1 to 45, almost a 1 to 50. So you see the risk to reward that you guys can get understanding market structure, waiting for lower time frame, distribution accumulation, depending on which direction you're trading, waiting for these levels to be met. We had a liquidity run over to the left, lower time frame. We came back up into that. We waited for price to start to slow down. Potentially some volume divergence came in there, which I'll look at now. And we just look for distribution around these levels to take it short. The breaks of structure on the lower time frame really indicates and confirms that sellers are now taking over, starting to slow down. We had that last run, buy to sell. We have broken structure. We should not come above this high now. We have mitigated over to the left. Indicators. This is really the only indicator I use besides the 50 EMA. FI, and we can see clearly volume divergence. Price is continuing to push up, yet volume is starting to diminish. Okay. Price pushing up to mitigate this level. Volume is still pushing down. This is a fake move. Okay. That's how you indicate fake moves in the market. Price pushing up, volume pushing down. Fake move. We are looking to sell this. Overall volume is starting to shift. They are offloading their positions around these key levels, especially around this tan box, which was the sponsored candle over to the left, to mitigate those orders. What happens when you mitigate orders? You get out of those orders. Hence, volume starts to decrease from your buys, right? So now you got to get out. We're moving short. So that's how you utilize volume divergence, and that's how you can get huge risk to rewards simply just looking for what I just told you. So that's Eurocad. I'm going to go over now to more recent price. Let's see where we're at. So now we can see after this huge move, I think this was news of some sort, I think like rate statement from the Canadian dollar, we came back up into supply, mitigated these orders here, filled in balance, and continued. So really just lower low, lower high, lower low, lower high, lower low, lower high. And we even came back up into supply here. So this supply was mitigated with this supply, which was mitigated with this. Okay. So now continuing. We can see that we're making lower lows, lower highs, lower low, lower high, lower low, lower high, lower low. Now, what is this an indication of? Is this a reversal or is this just a continuation? Meaning, are we actually reversing since we broke structure here? Are we going to reverse, pull back, and go long? Or are we now looking to just continue to the downside? Well, you have to understand what price has done in here, where price has mitigated, where reactions have taken place, and where we're most likely to continue. Well, we can see here clearly lower low, lower high, overall lower low. This was just a sweep of liquidity for a lower high for then a subsequent lower low, in which we pulled back into premium price, came into lower time frame area of supply, which I'm not really going to get into. But then we just continued. So now what I'm looking for, and this is what I love to see prior to pullbacks, is liquidity being formed. Just like we saw liquidity way over to the left in that 5-minute candle, it was forming before the institutionally sponsored buying volume was influxed. So lower high, lower low, okay? I would like to see these highs run. I would like to see an overall pullback, liquidity taken here, all of these highs run and coming up into this area of inefficiency. We can see that there was just straight selling volume here. There was no buying offered within this area of price. So simply just going to be looking at the 50% of this imbalance between this wick and this wick, 1.36665, 21.5 pip stop right above the high, taking it all the way down to that higher time frame target. Obviously, you can have multiple take profits, which we do recommend, just so you don't, turn a winning trade into a losing trade or a break-even trade. Overall take profit 1.32, which I went over before. That was our higher time frame level. This is the 1 to 21. Take profit 2 could easily just go below this low because this is where the higher time frame liquidity way over to the left, which I talked about earlier, was. So relatively equal lows on the higher time frame. You could easily just set it at 1.35158, which is your take profit 2. and you can just continue 1 to 21 overall. So that is Eurocad. That's how I break down charts every single day. That's what I look for. Obviously, if there's no setup, there's no setup. If there is, there is. Don't try to force anything. Maybe, some weeks you will take a lot of trades, some weeks you won't. But the biggest problem with traders that I see is that when they're not taking trades throughout the week, they feel like they have to. They feel like they have to force something just to be involved in the market. That's not always the case. You shouldn't be doing that. Only be trading when it meets your rules and criteria, even if that's only one time a week. Sometimes you don't trade at all for the week, and that's okay. No trade is sometimes better than a losing trade. Well, always better than a losing trade. But yeah, that's Eurocad. Now I'm going to hand it over to Aiden. He's going to talk about a few pairs and then go into the theme of the week.
Awesome. Let me try to share here. If you guys could put in the chat what pairs you're looking at, what you're in right now, and we'll see what's up. Hopefully the share works. All right, can you see my screen? Put a 1 in the chat if you can see my screen. All right, cool. I think we're good. Someone said GCAD short. All right, I like that. Now I'm going to try and give you guys a few trades because I know obviously this is a live session. So that's the ultimate goal here. So someone said GCAD short. I like that. What level are you looking at? For me, obviously our VIP service, we're in shorts from up here. So ultimate target of 1.6 has not been met. Okay, so we're still looking to take continuations down. So for me, I like 30-minute time frame. Simple, trend line liquidity, run, buy to sell, yesterday, New York session. All right, so what you could do, 50% of the up close volume brings you in around 1.62173. All right, and if you're a riskier trader, obviously you can take a limit, but preferably I'd like to see, a run up and a distribution on the lower time frame, buy to sell, break a structure, continuation. Then you can have a tighter stop, right? You wouldn't have to place stop above this high, all right? So good job. I agree with you on the GCAD sells. See what other people are looking at. GJ. All right. I was actually going to break down GJ for you guys. You might remember from our last live, we still have these equal lows intact. All right. So this is going to be the draw on liquidity, in my opinion. Okay. So what we can do is look to sell pullbacks. Personally, I like this old low here. I like this level a lot. Okay, and if you scale in, lower time frame, 1 hour, this low lines up beautifully with the 61.8. Again, that's just a confluence. Same with our 1 hour 50 EMA, but a lot of confluences around this level of price, 162.1. All right, so there's a sell limit for you guys, 162.1. Okay, we're going to target our equal lows here. Okay, you can target below the equal lows, 158.50. All right, but I like the old low within structure. Okay, simple structure play, 61.8, 1 hour 50 EMA, easy. Okay, so GJ looks very, very good to me as well. All right. CAD-J, I don't really look at CAD-J, but probably going to be in alignment with GJ. All right, so let's take a look at UCAD. Here's another one, guys, that I really like for continuations. All right, so here's another trade for you guys today. And I really have two levels that I'm looking at for continuations. Let's just go ahead and zoom out a little bit on UCAD. Obviously, price is now higher high, higher low, higher high, right? So we'd like to catch another drive cycle to the upside expansionary move, but even higher time frame. And this is the 4 hour, but obviously we have higher low, higher high, higher low, and we've really kind of been within this range. This higher low has not printed a new higher high yet, hence why we ran. Remember, we talked about this on the last live session. Okay, this higher low, it was actually equal lows here, did not produce a new higher high. So this does not make this valid structure necessarily to play off of here. Hence why we ran the liquidity. And then we had the expansionary move, the break of structure, the pullback, okay, higher low. So for me personally, because the dollar is so bullish, I wouldn't be surprised if we only got a small pullback into this level here, all right? And just maintain some type of structure like this on up to the upside, okay? And so for me, this 2 hour down close, what we can do is also kind of scale in a little bit. If you look at the 15-minute, we have a nice inefficiency that we can play off of, okay? It might have been the 30-minute I was looking at earlier. Yeah. Okay, so 30-minute time frame. I like this in and around 1.271. What do we do? Relative equal lows, run out, sell to buy, inefficiency. Okay, and obviously you can take, 50% of this as well. And that brings us right around that same area. All right. So I really like UCAD continuation from this level. Where am I targeting? Okay, higher time frame, looking at 1.3220. 1.3220. All right, so from this level, be about a 1 to 20, right? If you just took the limit here. All right, so mark that off on your charts. 1.27106 is the level. Now, if we do get a steeper retracement, which I wouldn't be surprised, if we busted through this level, I'm then looking at this daily down close. Okay, I really like this level as well. This is the open of that volume, the sell to buy on the higher time frame. Okay. So if we do get some type of significant retracement on the dollar, that's our level, 1.26144. All right, and then we can take this thing up to 3.220. All right, so two different levels here on USDCAD. We've also got the daily 50 EMA now curving up, obviously supportive of price now, more than likely. All right, so very, very clean on UCAD. Yeah, and someone said CAD JPY short. That's, obviously if we're looking to buy UCAD, CAD JPY is inversely correlated. So, that would make sense to me. All right, I just don't really look at that here. All right. I think someone else said GU. Let's see. GU is an interesting one, guys. This thing is obviously melted off the face of the earth. And you remember we talked about this on our last call. Weekly time frame, equal lows. Obviously, we engineered liquidity here. This massive move up on the weekly was engineering liquidity beneath these lows. Okay, you have to imagine this as the, let's say, 1 hour time frame. This is the weekly, but just imagine in your mind it's the 1 hour. Okay, logically, we would see double bottom. That's engineering liquidity. This run up is fake. We know that ultimately these equal lows are going to get run. Then we have the break of structure. So all the people who are looking to buy GU way up here in premium, weren't thinking of the fractal nature of the markets, that ultimately we need to get down into discount here on GU. And I think our last live session, we were still trading up in here somewhere. All right. So now we are starting to trade into discount, right? Obviously 50% below is discount. I think that we can dig lower. So I don't think the dollar is ready for that reversal yet, right? And if we just pair that back with USDCAD, right, we're still expecting a run up and a higher high on USDCAD, right? So naturally, we would want to see more downside on GU before the upside. All right, so we could even come all the way down. I mean, here's our real structure down at the 78.6. We could come down into 1.2020, 78.6 level, and be a nice discount to get this thing higher. All right, so just keep the higher time frame in mind. Whoever mentioned GU is probably thinking intraday. I could see this potential here, okay, with the London session, sell to buy. But just remember, you could also just simply look at this as a liquidity run here. Okay, we are in a very, very strong downtrend, and oftentimes people get caught up in wanting to trade this counter trend. Okay, yes, this would be a potential valid level. Okay, but you have to understand that you're taking on a lot more inherent risk trying to buy this thing right now, right? You just really don't want to be involved in that. All right, so I would just keep looking for excuses to sell this thing. All right, I don't really see an excuse right now. It doesn't look terribly clean to me, but I wouldn't trust buying this here. Okay, unless we get some type of lower time frame accumulation. That's probably what you were looking at. I'm not sure, but I would leave it. All right. All right. So I want to talk a little bit about time and price. All right. So if you could, somebody drop in the chat what your perspective of time and price is. What is the significance of time and price? Okay, what does it mean to you? Because for us, or at least for me, time and price is really the impetus and the driving factor and the model behind my trade setups. Okay, it's very, very, very critical to understand in depth if you want to see consistent success in the markets. So I want to break it down just a little bit, just the kind of rudimentary background on time and price today and how we use it as a model for our setups. Okay, and so the basic framework is we want to be able to identify some type of Asian range. Okay, we call it the Asian range. It's the Asian session, the initial choppiness of the day, okay, which you've probably all noticed. What this really is engineering the initial liquidity of the day, right? So the initial highs and lows of the day, we get people getting involved in the market, or placing buy stops and sell stops above and below those initial highs and lows of the day. Okay, and so these people are obviously breakout traders, more than likely looking for that run up through the initial high, trigger their buy stop, breakout trade. Okay, or people sell stops, run down, break out of the range, looking for that continuation in London session. Okay, so we have to understand, and especially this is applicable to obviously London, New York based pairs. Okay, we like to see the initial liquidity engineered at the beginning of the day, especially these pound and euro pairs, Swiss franc, CAD pairs. We like to see that initial Asian range. Okay, and oftentimes what happens is when London session opens, okay, let's say that for this example, this market is in an enduring uptrend. Okay. Well, in an uptrend, what we want to see is the initial run through the high, maybe just tap through the high of the day. And then we like to see an explosive move down, okay, manipulating price through the initial liquidity that was engineered for the day, or potentially just, equal lows or, double bottom, triple bottom engineered from the day before. We like to see that run down. What are we doing? We're taking people's stop losses who are buying. We're triggering the sell stops, and then boom. Okay, we reverse. We've manipulated. We've triggered the sell stops. We've trapped the breakout traders. And the critical component of this is that oftentimes, the vast majority of the time, this behavior occurs between 2 and 4 a.m. Eastern Standard Time. Okay, so oftentimes we will see a 2 a.m. candle Eastern Time or the 3 a.m. candle Eastern Time, sometimes the 4 a.m. candle, but typically the 4 a.m. candle is your true London session move, so it would be this candle. Okay, but doesn't mean that it can't be the 4 a.m. candle. But 2 to 4 a.m. is when we will see that type of sell to buy. Okay, and so if you're lucky enough to be in Europe or somewhere else in the world where London session is at a decent time of the day, it is the best session to trade, in my opinion. Okay, it's just unfortunate it's 2, 3, 4 a.m. here on the East Coast. Okay, but it's a very, very simple trick that is so powerful for you guys. Is between 2 and 4 a.m. we want to see the run down, okay, taking the liquidity, okay, and we want to look left. Okay, oftentimes this manipulation down is only to mitigate a prior inefficiency or sponsor candle from the day before. Okay, so we might have a sell to buy from the day before, expansionary move for the remainder of the day, come back into a range, engineer liquidity, come London session, we sell to buy, we mitigate, we get out of these orders, okay, and then we expand. Okay, and so if you are in the United States and you can't trade London session, or you don't trade London session because you prioritize your health and sleep, then London session is still very powerful for you, because in an uptrend, okay, the London session manipulation, okay, creating the low of the day often happens in London session. So we can have confidence that this sell to buy and this expansionary move from London session in an uptrend, we can have confidence that London created the low of the day and that this low will not be taken out. Okay, and so for us New York traders, okay, we can still have the confidence that, okay, we've expanded during London in an uptrend. What's likely going to happen, and what we want to see, is for price to calm down a little bit, maybe flag, engineer liquidity, okay, prior to New York open, London, New York overlap. Okay, and that really starts at 7 a.m. So what we want to see, sorry for this crude drawing, but we want to see, again, liquidity engineered. Okay, and between 7 and 9:30 a.m., we want to see a run on the liquidity, okay, and a mitigation of the price action from London session. Okay, so New York often provides the retracement for the expansionary move from London session, and we can have confidence in that because in an uptrend, London session ought to have created the high of the day or the low of the day. Okay, and so we can use the price action here as our basis, the manipulation, the sponsor candle that ran liquidity and mitigated something else. We can use this as our POI, maybe the open, maybe some type of inefficiency, 50%. Okay, just gives us flexibility because we understand now that this low is likely the low of the day. And then we can scale in for a proper entry and have confidence in a continuation for New York. All right, so kind of a rough rudimentary breakdown there, but hopefully that makes sense. For me, it's really what provided the breakthrough. Okay, and that's why I was really excited to kind of show you guys this, because this is the greatest confluence in my opinion. Okay, if I see liquidity, okay, and just think of it this way: coming into London session or New York session, open. Okay, what's the first thing you want to do? You want to say to yourself, where is the liquidity in the market? Okay. Obviously, you should already have an understanding of where trend is. Okay. So if we're in an uptrend, you should say, okay, where is the sell side liquidity? Where are the equal lows? What lows are going to be run out at London Open or at New York Open prior to the move in the direction of the trend? Okay. So that's the initial thought that you need to have every single time you sit down in front of the charts for a session open. You should already have the bias down because you've done that during agent session or you've done that over the weekend. Okay. But these markets are driven by liquidity. And that's why liquidity principles are so powerful. All right. So again, these time frames, very, very critical and important. 2 to 4 a.m. Oftentimes, guys, it is the 2 a.m. Eastern candle. That's the fake candle. Okay. That's this down close candle that's trapping everyone. Oftentimes 2 a.m. Okay. It doesn't mean it can happen at 3 or 4. You'll see it quite frequently at 3, less frequently at 4, but most frequently at 2 o'clock. Same with New York session. Okay, it just depends. New York session is more so a hit or miss in terms of what specific candle it is. So that's why I put the range 7 to 9:30. That's when we want to see that manipulation and the mitigation of the prior down close. All right, so hopefully this makes sense. Really, really powerful tool to add to your arsenal. Obviously, there's some more in-depth concepts. So if you're interested in kind of getting into that, if you found this insightful, certainly give us a message afterwards. But I wanted to kind of show you an example or two of what I was talking about. So we have USDCAD here. Okay, this is the same pair we just talked about just a little while ago, looking for this continuation. All right, but again, remember we had the run on liquidity here. Okay, the equal lows. We had a low here. We ran liquidity, had to break a structure. Okay, and so right here, obviously VIP, we caught this move up, but I want to kind of zoom in and show you the time and price here. All right, so we have the 6 a.m. We have the 6-hour candle, which is the POI here. Okay, trading into discount. All right, let me hop on down to the lower time frames. Sorry, guys, bear with me. My computer's being slow. Man. Should just use bar replay, whatever. All right, anyway.
I may interject really quick.
Yeah, go for it.
So all of these concepts that he's showing you, just be mindful that they're not going to look this pretty all the time. So having that awareness, it's not going
100%.
to be a perfect, Asian range liquidity sweep and then sell to buy or buy to sell. You just have to understand the concepts and then apply it to what's actually being shown to you on the chart. So it's not going to be so very pretty where it's going to look the same every time. It's going to look different, but the concepts are going to be the same in regards to price, time, liquidity, influx, liquidity grabs, all that stuff. So now let me ask you a question, Aiden, because this is important for everyone else to know. What happens when you are in an uptrend and you see a buy to sell candle? Does that mean that you should be taking it short?
When you're in an uptrend and see a buy to sell candle?
Yes. So if you see a liquidity run to the upside and then a buy to sell, but you're in an uptrend, what does that mean?
No. Oftentimes, people will get tricked by that. All right. And we want to see liquidity runs. We always want to see liquidity runs in the opposite direction of trend. All right. And so, going back to what you were saying, it's oftentimes people look for what's pretty, right? What looks pretty, what looks good. And through experience, it's almost always that the counter trend setups look good, right? They entice you. They look good, but the continuations are difficult to find from a like a pattern perspective or looking pretty. They don't necessarily look pretty. Okay, and that's why it's so important to master the logic. Okay, the logic instead of memorizing what patterns look like what charts look like. And that's what we teach in our course is, you know, most people try to memorize patterns and then they look at charts and they're, you know, analysis paralysis because nothing ever looks the same. Okay, so if you study patterns, right, you're looking for a specific look as opposed to mastering and understanding the underlying logic behind the pattern, right? Because it's never ever going to look the same. Okay, and you know, my markup, my drawing below was obviously, it was perfect, right? I had a perfect range drawn out, you know, and a perfect sell to buy. It's you know, sometimes it's like that. It's too good to be true, right? But oftentimes it's not as pretty, right? But if you understand the logic and what's happening, okay, that makes the biggest difference, not what something necessarily looks like. Okay, so
exactly. Everything's going to be looking different every time, and that's just through my experience within the past 5 years of trading. Nothing ever looks the same, but the concepts and the reasoning behind why price is doing what it's doing is always going to be the same. So
correct.
to kind of piggyback a little bit off of what Aiden said about, you know, if you're trading if you see sponsored moves in the opposite direction, meaning if you're in a bullish uptrend and you see a buy to sell, it doesn't necessarily mean you should be taking a short trade off of the mitigation. It probably just means that price has swept some liquidity to the upside, buy side liquidity, and is in for maybe a pullback of some sort for then a continuation. That's why I say structure is always the most important. Structure trumps everything.
I mean, here you go, guys. Here you go. Okay, USDCAD, this is the example I was talking about. You know, we have again, this is not a perfect looking range like I drew, okay, but this is what you could say is your Asian range. All right, but what do we have? We have a buy to sell here. Okay, but why didn't this play out? Okay, you got a reaction, sure, but why didn't this continue? Right? Well, remember, higher time frame, we're in an uptrend. This is the 6-hour time frame POI. All right, and so in reality, what's happening here, okay, understanding the logic, we're enticing, okay, initial run, slight run higher, okay, remember we talked about that, okay, what time of day is this? 2:45, 3, and then we have the run starting at 3:15. We have the run on the equal lows. What have we now traded into? Our 6-hour time frame, right? So again, where's the liquidity? Okay, here. That's the first thing we should be asking ourselves. Where's the POI to the left when we run the liquidity? Okay, number 2. Okay, and then, okay, let's say, you know, you didn't catch it right off the POI here during London. Well, that's okay. New York traders, again, what do we have? We have the confidence that London, the low in London, creates the expansionary move and the break of structure. We have the confidence come into New York that London's low is going to be the low of the day. Here's your pullback into discount. And, you know, a couple things you can do in terms of entry. You know, you could look at, whoops. Okay, here's your volume. Let me use bar replay here, make this cleaner. Okay, here's your down close. Okay, this wick is lower time frame selling, so sell to buy. Okay, we can use the 50% as our threshold for entry. Okay, 50% of the volume. Okay, we broke the structure. We're looking for a retracement in New York Open now because, you know, we're asleep during London, unfortunately. But again, we can have confidence in New York. We'll get the retracement into discount, 50% of the down close volume to the T moon. Okay, you can, hell, I bet you this is a 61.8 too. All right, there you go. Okay, so multiple confluences around this level. Okay, it's the old last point of support here, break of structure, pullback 61.8, 50%, a lot of confluence around that level, 2475 moon. All right, so it's understanding the logic here. What is actually going on? London session. All right, I mean, here's another one we were looking at that VIP took yesterday that I sent out. Same kind of deal. So we're in an uptrend. Dollar is very, very strong. We all know that. All right, so we don't really need to break that down. But obviously we have, I'm still in barter play. All right. Obviously we have, 7 a.m. manipulation down, 8 a.m. manipulation down, running through a low. Okay, running through a low. So taking the liquidity, expansionary move. Okay, so this, again, we want to zoom into this now. Okay. This is all that went through my head when I sent this out yesterday, guys. Okay, so I'm looking at this level now for the next session open. All right, so let's zoom down a little bit. And my entry was based off the 25-minute. Yesterday, got it to the T. Okay, so I zoomed in. I saw the 25-minute. I really liked it. Now, logically, let's think about it. Okay, we had to sell the buy, the expansionary move. Okay, 20 o'clock, whatever that is, 8 o'clock at night, Eastern time. Okay, this is engineering liquidity, my opinion. So we make the initial run up, trigger the breakout traders, stops are here. Okay, so come the next day, session, okay, coming into New York, 7 o'clock. All right, what do? Sit down in front of my charts. I say, where's the liquidity? Okay, we're in an uptrend. I want to be buying. I want to see a run on liquidity at the open of the session and then the expansionary move. Okay, so where's the liquidity? Here we go. Okay, what's left? What's to the left of the liquidity? Okay, when the liquidity gets run, what do I want to mitigate? Okay, 25-minute down close candle between 7 and 9 a.m. It's that simple. All right, so obviously the risk to reward, we took it at 1 to 5, but if you left a runner, this thing's at a 1 to almost 8 now. So, that's the logic. It's very, it can be very simple, as a very strong confluence. Obviously there's a lot more that goes into the analysis than just, time and price, but it's a very, very strong confluence, and it's helped me tremendously. So hopefully you found value in this little lesson, and we'll do another giveaway next live session based upon what we talked about today. So hope you enjoyed that. Let's see, Nate, is there anything else that you wanted to discuss, talk about, break down? Any questions? You're muted. Hold on. Bro, you're muted.
Oh, I'm muted. Great. Okay. Sorry, guys. Man, I'm losing it. So the one thing that I saw and said, hey, guys, how do you navigate for trades when the market becomes choppy? Sometimes a battle to find directions. I'm glad that was brought up. So oftentimes this can become very dangerous for a lot of traders, especially when the markets are chopping, because their psychology is, oh, they have to be in a trade at all times. They love the thrill. I'm telling you guys, when you guys are in a trade, I'm sure most of you are having some sort of euphoric feeling like, oh, like it's almost like gambling. So when you're in a choppy market, the best trades are no trades. I don't trade choppy markets, hardly at all. I always look for trending markets because that is the highest probability that, one, you're trading with the trend, and two, when you're finding pullbacks into areas of interest, like Aiden just discussed with, the take of liquidity and 25-minute mitigation at the right time of day, that's when you're going to see one, more volatility for your trade, but more highly probable chance that it will continue in your direction. So I would just stay away from choppy markets. Sometimes it's hard to identify. Sometimes, it takes a little bit for you to identify that because it hasn't, fully begun its range yet. But many people get caught up in trading ranges, and it's really not smart. So yeah, I would just always look at the higher time frame, look at, you know, where price should be coming into, whether that be if you're in a bullish market or bearish market, where are the overall higher time frame targets? So we had a higher time frame target on USD Chef, which is exactly where we came into, but you know, the price just kept going, and that's okay. Sometimes it's okay to leave a runner, but when you're in a choppy market and you have a higher time frame target, stick to that target. Don't switch your bias if you see some sort of breakout to the opposite direction of that consolidation block, because oftentimes what that is just probably manipulation, liquidity grab for a continuation in the overall trend. So I'm glad that was brought up, because many people do like to trade all the time, and it's not all the time smart, because you'll just get caught up in holding positions for days or weeks, just eating away those swaps and commissions. So
Everald said, I never quite understood mitigation. Mitigation is accounting for old orders.
Yes.
Right. So, you know, the open, think about if you're manipulating price and you sell, you know, you manipulate price down at a certain price, right? Well, you've sold it at a certain price. Let's say it's just 109 flat and you sold it down, right, to take liquidity. Price got above that level. You want to take it down to 109 so you can break even on those positions. Right, so
yeah,
you can get
or
out
else
of
those positions will still be in drawdown, and then once price continues, the institutional sponsored moves will be in drawdown. They need to get out of those positions, break even on those trades to continue. So it's not like these institutions are trading smart money. Like, they don't trade smart money. They provide the appearance for us to trade smart money. So us retail traders, we're the ones banking off their moves that they've already made, looking for clues that they leave behind. That's why trend lines and all that stuff doesn't matter. What is a trend line? It simply is, if you don't understand what it is you're actually trading, then you shouldn't be trading. A trend line, people don't trade trend lines. Why is a trend line forming? Well, it's probably forming because it's, well, liquidity. Retail traders are trading trend lines. That just offers liquidity for these institutions to take. So they sweep that liquidity, aka a sponsored move, push back in the correct direction, then they come down and mitigate. That's why the concept of smart money is really the only true way of trading institutional order flow. That's how these market makers are moving price. Not to say that other strategies can't work, but this is really the real way in which price moves. And that we're just taking advantage of, you know, the clues that they leave behind, aka these sponsored moves, liquidity, you know, et cetera, et cetera.
It's all in the logic.
Yep. So guys, that is all we have for you guys today. If you have any questions, please feel free to message us. We'll be happy to answer anything you have. But yeah, 2 weeks from today, we're holding another live session, 8 a.m. Eastern Standard Time, doing another giveaway. Hope you guys found value from this. And yeah, thank you guys for joining in. We'll speak to you in 2 weeks.
Appreciate it, everyone. We'll see you later.
Take care.